Now, given these two different mandates, is it a given, and do we need to make our peace with the fact that the two shall never meet?
No, there should be a tension between the two objectives, and it is a healthy tension. And this government fully recognizes the importance of it, in the sense that, after all, it was this government that created an independent monetary policy committee, gave it a clear target of inflation targeting, and indeed saw through a structural reduction in consumer price inflation. What used to run in the 8 to 10% range is now somewhere in the 4% range. So it's something we tout as a success rather than being a problem. But yes, I mean, there will be continuous debate on various issues, whether it's liquidity management or many other issues that keep coming up. And I think it's a healthy thing to happen.
And then to one specific issue, and that is liquidity management, because that is the big tug of war. The government wants more liquidity in the system. The RBI believes there is ample liquidity, and there is a discord there with even some board members taking a very stern view on this. But shouldn't a matter like how much liquidity there needs to be in the system be left to the better judgment of the central bank? You've created it with the mandate to do exactly that. Why not leave it to the better judgment of the RBI to decide how much liquidity is required in the system?
So it is not the case that the government dictates the liquidity levels, but we do we take cognizance of liquidity requirements of the economy in general, and particularly of financial markets. We had an episode recently where credit markets were having serious problems rolling over debts of NBFCs, for example. So obviously there are real economy implications of this, and we watch these closely, as does the Reserve Bank. And while we may debate things with them, we also work together with them. I mean, you saw that in the same episode. A couple of months ago, you had the issue with ILFS. That we worked very quickly to ring fence, but unfortunately some of that tension had already spread into the credit markets and other NBFCs. So clearly we then worked from the government side, very quickly went in there, used institutions like NHB and others to create liquidity, but also the RBI did come in and create various ways of creating liquidity. Now, exactly how much liquidity that must be is obviously a matter of debate and discussion, and by the way of judgment, and that judgment continuously changes. As things are right now, that particular problem in the credit market seems to have eased very significantly, and to the best of my knowledge, NBFCs for the most part are having much better time rolling over their paper. So these kinds of discussions and debates happen all the time, and differences of opinions and perspectives is a good thing.
No, I'm glad we've kind of, we've been able to tide over what was really looking like an acute liquidity issue till some time back. But the reason I asked that question on liquidity, as Principal Economic Advisor to you really is this a judgment call between liquidity, or is this a judgment call between liquidity and solvency? We were in conversation with former Governor Raghuram Rajan, and he said, it seems to also be a problem of solvency, and if that is the issue, then the government of the day needs to put in funds, and then there are political implications to that and all of that. So the debate really is this a pure liquidity problem that can be done with what the government has rightfully done, which is to ensure banks take over some of those loans? Can also be dealt with through OMOs, or is this a solvency issue like we saw in the case of ILFS?
Well, I'm not in a position to comment on former Governor Rajan's views. All I'll say, which is something I've said before as well, for the most part this problem was a problem of liquidity and rolling over. Even NBFCs, which have perfectly good, solvent balance sheets, were having difficulty rolling over, and so there was a credit market that was beginning to freeze up. So we required certain amount of backstopping and intervention, which we did through various ways. RBI played its part in it as well. And it has, as you just pointed out, significantly eased up. It is not fully over, but it has significantly eased up from where it was about, say, 10 days ago. I would argue that for the most part, this was a liquidity problem, not a solvency problem. Now, there was this specific problem related to IL&FS, where, as I said, we did act reasonably quickly about 2 months ago. We ring-fenced it. We helped replace the management. The management is looking at the various issues and will presumably take appropriate measures.
So at least the good news is that as of now, there isn't a crunch like we had seen before. As of now, we've been able to tide over the worst, according to India's principal economic advisor. But let me just move on to the other point of discussion. And there seems to be a lot of unsubstantiated views being put out there. The government has tried to defend its stance. The RBI has tried to intervene. And this is really as far as reserves are concerned. And every time there's an election, I'm not just blaming this government, even the previous government. In fact, I think former governor did say that I tried to put it thrice into a good practice, but I could never succeed, and it seems to just continue. And he was really referring to the previous government at that stage. So my question really is, given that how reserves are always a contentious, controversial issue, 3 lakh crore worth of reserves, in fact, money over that, I'll come and discuss whether there is rationale in transferring it and all of that in just a bit, but isn't it time that India, from a government, from a RBI point of view, sits together and finds out a more transparent, more mechanical way of dealing with reserves? Instead of leaving it to discretion, instead of, this becoming a tug of war as to who that money belongs to. That money, of course, belongs to the government. I agree with that. But can we avoid this tug of war every time with an election around the corner?
See, this has unfortunately become an unnecessary media debate, much of it incidentally ill-informed, that our government is somehow trying to loot the RBI. I've seen that particular term, in fact, being used, or that somehow these reserves are about selling down the foreign exchange reserves, or heavy monetization in order to transfer to the government. None of this is actually the case. So let me clarify, if you'll give me some time, to tell you what this is actually about. So just bear with me. See, every government, including the Indian government, has, as a sovereign, the power to do the following things: create money, carry out monetary operations, and to accumulate and manage foreign exchange reserves. Now, most modern governments have taken these powers and put them in an autonomous institution, which we call the central bank, which now therefore derives incomes from these activities. Now, these incomes, and the practice worldwide is, these incomes are taken in by the central bank. Some of it is kept back for obviously expenses like salaries and so on, and then some of it for capitalization, and then the rest is transferred to the government. This is nothing new about this. Even the RBI Act, which goes back to 1935, has a provision, if I remember correctly, 147 or thereabouts, which talks about the fact that transfers should be done. And this process of transferring seniorage, these incomes are called seniorage, is a very standard practice worldwide, has been practiced in India for a long, long time. The question is, how much money should be retained by the central bank for the purposes of capitalization? And there can be a debate on this issue, and many committees have been formed over the years to create formulae for doing this. So there was a certain formula that was being followed till, I think, the beginning of this decade. This was replaced by a Malegaon committee, which I'm sure you've heard about, with a certain formula. Another formula was being introduced. And so various formulae have been introduced, and it is fair enough that the government and the Reserve Bank, and by the way, the independent directors of the board, discuss what should be an appropriate level of capitalization and what formula it should be done. It is totally not the case that some arbitrary demands are being made by any side. This is a debate about a formula and what is an appropriate level that the central bank of this country needs for capitalization purposes. But let me be very clear, when you use the word reserves, remember this is not about the foreign exchange reserves at all. This is about rupee reserves. This is our own currency. This is a totally different issue, consequently, about how much rupee reserves is required for capitalization. So no correlation at all with foreign exchange reserves at all.
No, I understand that, and I'm glad you're putting it out in perspective. I'm glad you're differentiating the two. It always helps the viewer to understand and get perspective from a, from an informed voice. The reason why I asked that question is that if you actually look at this whole debate, which is in many parts unsubstantiated and ill-informed, there is another angle to this debate, and one of the angles is that if this reserve were to be transferred to the government, of course, legally and under law, there is a provision in the Act that justifies it. If this were to be transferred, it is also going to be inflationary, and if this is going to be inflationary, then the RBI will have to sell government bonds to counter that. How counterproductive is this then going to be? And I think the reason why this debate is being ignited before the elections, when UPA was in power and now that the NDA is in power, is because many people worry with so much money in the system and not knowing the end use, it could perhaps be counterproductive.
So I think this is a leap of imagination. There is no such thing that is being attempted. First of all, remember, this is the government that created the framework of the Monetary Policy Committee. We are serious about inflation control, and inflation did indeed go down by something like 500, 600 basis points since the introduction of this framework in the last 4 years. So, the fact is we are serious about inflation, and it is totally not the case that we are trying to do something terribly inflationary and irresponsible. Secondly, these incomes from seigniorage have already accumulated. This is not the case that we are trying to create some new amount of fund by printing large amounts of money. This money has already been accumulated. The question is, under what formula it is to be transferred. Now, if that formula, once it has been agreed, says that an X amount of money should be transferred, that money should be transferred. But surely this formula needs to be debated. It is not the case that nobody is making the case, neither the RBI nor the government, that arbitrary amounts of funds are transferred to anybody.
Fair point. I also want to look at another technical issue here, and one of the technical points that have been raised in this whole RBI versus the government, and not that I would want to paint it like that, is PCA norms. I mean, 11 banks, 11 public sector banks under PCA, MSMEs are finding it very difficult to access funds. There is this clamor within the board and otherwise outside that should those norms be relaxed. Now, for a government that's really taken it upon itself to clean up NPA, could that be suicidal to do? I mean, we turn the clock back and we see a lot of the NPA actually mounted in the UPA regime, where there was some reckless lending that happened, and this government keeps quoting it back, and it says that the regulator looked the other way. Are we not going to make the regulator look the other way once again if we ask PCA norms to be relaxed?
I think it's all a matter of being what is responsible to do. As you yourself pointed out, we have been very, very stringent about recognition of bank loans, and it was this government that introduced the Insolvency and Bankruptcy Code. We put in a lot of effort to make sure that defaulters of various kinds are, recognized, and in the case of willful defaulters are brought to task. So I don't think the case can be made that we are sort of somehow being irresponsible about bank lending and recognition of stressed assets. What we do think, however, is that we need to have norms that are in line with what is generally considered global best practice. Now, if it is the case that there are certain areas where we may perhaps be beyond global best practice or Basel III requirements, then we should look at them. It's not the case that if we introduce global best practice, we will suddenly become much worse off. Far from it. The fact is we need to also take into account the fact that we have an economy that is growing. We have an NBFC sector that is certainly looking for more credit, and we also need to make provision, therefore, to provide that credit, which is a legitimate demand of the economy. Now, we have to balance various things, and a reasonable balance needs to be discussed.
No, fair point, and I think that's a balanced answer to give as well to this entire problem. But the reality also is that we can't turn the clock back on NPA war and let alone some reckless lending. But I will quickly ask you two questions on demonetization and then two on state of the economy, and we'll end this. And
no, we are totally. This is totally.
Sure, go ahead.
Yeah, you may have to speed it up because I have to go to some other.
I will. So I think the one question on demonetization is, and you've put it out today saying that 2 years after demonetization, currency in circulation is at a particular level, 3.47 trillion rupees, below the long-term trend. You're using the 20-year average growth rate. And you also put out a fantastic chart there. But the reality is, if you go by the minutes of the RBI meeting of that day, 2016, 27th November, 8th November 2016, it clearly points out that the RBI had red flagged two of the objectives that the government was going to espouse. One was the crackdown on black money and the other on counterfeit currency. In that sense, were those wrong objectives to start demonetization with, considering it has become such a political hot potato now?
I mean, I think that is precisely what was being attempted. I mean, the fact that large amounts of counterfeit currency didn't come back to the system doesn't mean that they weren't floating outside the system. It just means that they weren't brought back in large numbers to the banks to exchange. Now, as far as the numbers that you pointed out, you seem to suggest that the numbers I put down were not quite reality. That's not the case. I mean, I put down real hard data. And the point I made was that, look, there was a break in the trend. If you compare the current level of currency in circulation with what existed in October 2016, that would be wrong, because clearly 2 years on, we would have a much higher level of currency in circulation if nothing had happened. So you have to look at the trend number. And I compared it with the trend and showed that the currency in circulation today is 3.5 trillion less than what would have otherwise been, which I think is the correct distinction to be made. Now, whether or not that led to a dramatic reduction of black money and so on, I'll let you decide. But let me point out that demonetization cannot be taken purely in isolation. It was one of several efforts that were made to work against black money, which included various things, including the Benami effort, the effort towards improving tax compliance. GST has many implications for tax compliance. The effort to improve digitization and electronic payments. So once you take all of these various measures into account, then clearly this demonetization is a part of that. And I would argue that for a country that till very, very recently was not merely that rule breaking and tax avoidance was a routine affair, many people used to openly brag about it. And I think that culture change has genuinely happened.
I wonder if we paid a big price for that culture change. But last question, are you losing less sleep over India's fiscal deficit today as crude seems to be slowly?
No, that is up to you to judge whether the culture change is worth it.
Okay, that's my judgment call. But are you any less worried about the fiscal deficit? It seems that crude is beginning to recede as well. We are looking at levels of 70 instead of levels of 80 that were being spoken about. Is that good news? And given that we are, what, 4 months away from, in fact, 2 months away from a union budget, a vote in the count, is this good news really?
So obviously we are an oil importing country. When oil prices fall, we like it. And particularly in our case, it affects both domestic prices of oil, but also our exchange rate, because through the current account. So yes, we are always happier with decline in oil prices, and that is the case here as well. And as you can see, it has fed through now to the exchange rate as well. The exchange rate has also begun to appreciate. If you remember when we talked about a month or so ago, and the rupee was at 74, I had mentioned that the chances are that the balance of risk is that the rupee will appreciate from that point on. And let me reiterate that if oil prices remain at these sorts of levels, then the balance of odds is that even from here, the rupee will probably appreciate. But again, I'm not into predicting oil prices, so I'll let you judge whether oil prices are going to stay here or not.
No, low oil is always good news for the Indian economy. But on that note, Sanjeev Sanyal, thanks very much for sparing time out and speaking to us right here on ET Now. Liquidity, PCA norms, reserves, all of those very important issues that are now out in the public domain. And it's important for people to get a cross-section of views to make up their minds. Thank you very much for sparing time out. We'll call it a day here and I'll hand it over back to my colleagues in Bombay to take it forward with markets.